I'm Doug McKenzie.
And I'm John Ward.
And we're the co-hosts of the ABCs of IBC podcast.
Come join us as we share our unique perspective on the infinite banking concept as the creator, Nelson Nash, intended.
Hi, everybody.
Hello. Thanks for joining us, everyone. Busy day today. Wow. It's just busy out in the world. And looking forward to
taking
some
a break.
Time over the holidays. What's that?
I said you get to take a break and hang out with me for a little bit.
Yeah. Yes. Thank you. Yeah, it's always fun.
Hope everybody had a good Christmas and has a nice New Year's plan coming up.
Yeah. Be safe, everyone.
Yeah.
But have fun. Have fun, but be safe. One way or the other.
My idea of fun on New Year's Eve is I usually go to bed at the same time I always get to bed. So like 9:30, 10. I think about it. I'm like, hey, maybe I'll stay up till midnight, and then it gets to be 9 and I realize there's no way I'm going to do that. So I don't care.
Yeah. Oh, yeah. I try to, it's not quite the same for me, the dropping of the ball anymore. It's not that much fun.
So I've only watched that one time, and I thought it was incredibly, I didn't realize it just kind of went slowly down this pole. I thought that they literally dropped a ball, like off something. When I would hear people talk about it when I was a kid, I really thought that's what they did.
Yeah.
And that, to me, that's cool. If they're going to throw some giant ball off a skyscraper in New York, shatters on the street. So
right.
I would watch.
Splattering people everywhere. Yeah, gladly that they just lower it, slowly lower it.
Yeah, it's kind of boring.
Yeah. So I've been talking to some people since we talked about these child policies. And one of the things I want to make clear today is talking about the fact that, you can, parents have to have coverage. But the parents don't have to have whole life. So if they're thinking, well, I want to have, first of all, I want to have income protection if something happens to me. So all those lost years potentially of income would be covered. So all the ambitions, all the dreams that you have for your family, for each other, husband and wife, for your children, and what you would like them to be able to do, go to college, I don't know, play sports and clubs and all that kind of stuff. There would be the money without the person. That's the first thing, right? So that is the life insurance side of it. But they may want to get the permanent policy on the children so that they're locked in, right? And then the parents could put term. And we've talked about convertible term before, Doug, right? But I want to make sure we explained how that works, right? So go ahead. Sorry.
Well, it's been a while, and we were actually talking about that before.
Yeah.
Was it really worth doing another episode on this? And we decided that yes, it was. We would kind of dive into the mechanics of it a little bit deeper, but we wanted to just go over it again because we have had combined, like John was saying, a lot of instances, especially lately, where people are looking at setting up these policies on their children just because the compounding time is so substantial. And like John just said, the insurance company goes off the death benefit on the parents. It doesn't matter if it's done via whole life or term. And then we've had a lot of conversations lately with people too that think, perhaps now I don't have the income to pay whole life premiums, but I'd like to do it at some point in the future. And so we wanted to dive in again to just how simple and powerful a convertible term policy can be for people planning their future. It's actually a nice time to do this. People think about New Year's resolutions and going into 2024 with coverage for your family and the ability to potentially grow your banking system in the future would be a good option, I'd say.
Yeah, definitely. Yeah, you're right, Doug. So I think that one of the things that's I want to emphasize to people listening that may not know this, which is, you don't, when you convert, you don't have to convert all of it, right? So let's just say you had $1 million in coverage and you decided you wanted some of it to convert, and you only have a certain window, right? You, let's just say it's 50% of the term period. So if it's a 20-year, somewhere around 10 years, by then you have to have decided that you want to convert, and convert all of it or some of it. And that's the beauty, right? Is that you can get all this protection for your income, and maybe you want to, still have all that protection, but then you want to only convert a portion of it to whole life. And the way that works is that you convert, let's say you started this policy when you were 30, and at 40, you decide to do the conversion. You have two options. One is that you can uh, pay a lump sum of the premiums that would have been incurred for that past 10 years. So, like you were starting at 30 with the whole life, and maybe you have, you've been saving money, maybe you've changed jobs, increased pay, got bonuses, what have you. Let's just say, or you bought property, sold it, made a profit. I don't know. But you can go back and make it look like you were the 30-year-old again, as long as you pay up all those premiums that would have been due back then and up to this day. And then you could then opt to convert and say, I am 40 years old, and what are my premiums at 40, and just start from there, right?
Mm-hmm. But you don't have to go through underwriting
You
at
don't
any.
have to go through underwriting again.
Yep.
Yep. Yep.
And that's probably, I would say, the most one of the best things there, right? Because a lot can happen in 10 years. People, you could be in a different rating class. Let's say you've gained some weight, or you've had some health conditions that maybe make it so that it'd be hard to get insured or impossible to get insured. It doesn't matter. You can still convert at the same rate class that you were before, either at your current age or the age at which you got the policy, if you backdate premiums.
Yep. Yep.
And so, just so that everyone knows, not all term insurance is convertible.
That's true.
So, John and I are used to that because, most mutual insurance companies have convertibility with their term. Some, usually there's some percentage of time that's included. Some have convertibility riders that you pay a little bit extra for to extend that. But we don't want our listeners to assume that if they just go get term insurance somewhere that you could convert it. Um, a, that company may not have a whole life product available, or one that you would want to convert to. Like, they might not have a whole life product that would be good at all for doing
Mm-hmm.
IBC.
Mm-hmm.
And so when people are out there, I know they have a lot of services out there where you plug in your info online and they, run across a bunch of different carriers and give you the cheapest option. That's
Mm-hmm.
great. But if your purpose in getting this set up, aside from obviously having the death benefit to protect your family, is to potentially practice IBC down the road, it's really important that you consider the characteristics of what you might be able to do later on. So you'd want to make sure that, is it convertible? If so, for how long? What kind of products does this company have available, right?
Mm-hmm.
That you could convert to later on. Is this a company that you're going to want to work with? And the nice thing, if you do this with an IBC practitioner, it's very likely that you would be set up that way, and then you'd be working with that same person when you convert it, that would help you to set that up the correct way.
Yep.
So just wanted to point that out, because I was just thinking about that I kind of take that for granted because everyone that we write with has that optionality, but there are a lot of carriers that don't, or people that get policies through non-mutual carriers.
Yep. While you're saying that, a thought that came to mind is there's um, there's people probably listening that have term, and then they go and say, I don't even know if mine's convertible. They find out it is convertible. There's a number of term policies that we can take in, and we can have it converted. So it doesn't have to be the same insurance company. I want to make that clear, right? It there's a number of different insurance companies that you can convert into from one to another, going from term to whole, right? That's point number one. And then point number two is, let's say you put a policy starting January 1st on yourself, a convertible term, and by December 31st of this year, or 2024, you decide, 12 months later, you decide you want to convert. So let's just say you converted that day. You would get credit for the premiums that you paid on that term for the previous 12 months.
Yep.
If you've had say a convertible term for 5 years, you'll still get the 12 months prior, but you won't get the 5 years, right? You won't get more than the 12. You're only going to get the 12. And so in some ways it seems like, well, geez, I kind of wasted that, that money, but it's just like any other insurance at that point, right? You're renting the protection through term, right? So you only have a certain period of time, just like car, home, right? Um, Property and casualty, all that stuff. You have to keep renewing it, right? Which then the premiums could keep going up. I mean, you can have a level term. It's going to
Will keep going up.
Well, yeah, definitely on those things it will, right? And if you got a 1 year term, for example, then yes, the next time you go, you got to start all over again. But yeah, the convertible terms, yeah, you want to know that you do get credit for 12, at least the companies that we work with. I can't speak for every insurance company, but I can certainly speak for the ones I work with. And then, that's the beauty, is that if I have some of it, I find out whether I want to go back in time. I only want to take, say, 500,000 of my million and convert it. I still keep the other term, right? And then I just move ahead. I can decide, yeah, do I want to make it like I was, 30 years old, or I want to make it like I'm 40 today, or you know, any period of time. And then you just have to come up with the lump sum if you want to go back in time and pay those premiums, and you're off and running. And it's the beauty, like you said, is that you're locked in, and you're locked in at that rating, right?
Mm-hmm.
So if you're standard or super preferred or whatever, you're locked in there. So that's a beautiful
Yeah,
thing. So
it is really nice. I think people overlook just people have a tendency to be very optimistic about the future, which is not a bad thing, but it's not a good thing when it comes to life insurance. And like I said in the beginning, we talk to a lot of people that perhaps paying thousands of dollars a year in premium is not a good fit for them at the moment, but they can afford a term policy. And I've heard this many times. Well, I think I'm just going to wait until my cash flow grows a little bit, and then I'll start the policy, the whole life policy, a few years down the road, and just forego the term policy for now.
yeah,
The
yeah,
real
the difference, right? We say term, and of course, the whole world of insurance, life insurance marketing, is to try to sell you the most amount of coverage for the least amount of money.
Mhm.
And that can be beneficial, but you need to know what you're buying, know whether it's just plain term, that it doesn't have any convertibility, or it does, and then decide, okay, why would I do a whole life for the same amount of coverage? My premiums are going to be higher. One is, this is an asset. This is something that you can leverage as an asset, just like an asset like a home. You can leverage if you have equity there, right? And you can leverage it to get some cash. And you can do the same with your policy, though it's much better than that example. But yes, you want to be participating in the profitability of this insurance company, right? Where you end up receiving dividends if they're profitable, which they typically are. And so over time, the benefit is that you're building up a bigger asset. The value of it continues to increase, and obviously the amount that you can leverage continues to increase. So,
Yep. Yeah, and it's just so important to get something in place now. I am guilty of this myself. I mean, I've mentioned this before. John knows about this, but and I'm a pretty healthy guy. I mean, I realize most of you haven't seen me in real life, but I'm a fit guy. You know, I eat well, but I have a health condition that makes me. I mean, it makes me uninsurable right now, and I do believe it's going to resolve at some point. But it's a little bit scary to think that I might not be able to create any additional policies on me. Right? I have my wife, I have my son, but I do regret not starting a convertible term policy
yeah,
for me. I mean, it wasn't time to start another policy, but I regret not implementing a convertible term policy because I wouldn't be concerned about that right now.
right.
I
You'd be locked in, right?
I'd be locked in, and I could certainly be putting more premium towards that right now, but I can't.
Right. Yeah.
And it's because I just assumed that because I lead a healthy lifestyle, because I've always been pretty healthy, that I'd be healthy again in a few years when I wanted to get another policy. And that didn't wind up happening. And these kind of flukes come up all the time in life. People don't tend to assume that they will. And that's why I just want to throw this out there truly as kind of a thing that I really believe in, that if you think that down the line you are going to be practicing the infinite banking concept with a whole life policy, but you really don't have the money to do that right now, I would urge you to start with a term policy that can be converted, because you're going to have a nice death benefit for your family, and you're going to be locked in with that rating class, that health class, and the ability to, and you know that no matter what happens, you can practice this moving forward. And I know that sounds pretty simple and straightforward, but a lot of people don't really think that way and wind up in situations where they'd love to open another policy or their first policy and they just can't.
Yeah. No, I really appreciate you sharing that with everyone, opening up to that, because that's you can't get more real than hearing it out of yeah, I'm not going to call you a horse, but
Yeah.
directly from the source. Just live that, right? And yeah, we all could talk to people that have probably been in the same situation where they're like, and we have with our prospects find out, or some of our clients even, that they can't get more. And that's, again, why not, right? Terms, great. At least you've got the protection for the family. Um, you know, as they say, if you love someone, you probably want to have a term policy at the very least. And why not make sure it's a convertible term, right?
Mm-hmm.
It's really just making sure that I and T is crossed, I's dotted and T is crossed, and now you have options, and that's what it's all about: is keeping your options open. Um, and if it's not a convertible, then you just cut that right out of the optionality. And so just make sure you do that. And if you have questions, if we're not making ourselves clear, please, reach out, send an email, and happy to help try to clarify, make sure we're setting everybody straight on how this really works.
Yeah, that sounds great.
Okay. I wish everybody a happy new year. Thanks again for being a listener. And please subscribe, follow. We do have an outro message that says to do that, but I think we should get it right in here. You're going to hear it at the end of this uh, recording, but please, yeah, that helps. That helps get the word out that we're even here doing this, and we'd like to get the message to you and your friends and your family and everybody else that is connected to us as the single one.
Yeah, while we're at it, if you could leave us a 5-star written review,
Yeah.
on whatever platform you listen to, Apple iTunes, Apple Podcasts. I sound like I'm 90. Apple iTunes, Apple Podcasts, Spotify, wherever you listen, that would be greatly appreciated. Thank you.
Yes, it certainly would be. So thank you all. And Doug, Happy New Year.
You too, my friend.
Okay. Thanks, buddy.
Bye.
See ya. Thank you for joining us for another episode of the ABCs of IBC.
If you enjoyed listening, please hit subscribe and leave us a 5-star review wherever you listen. It really helps. See you next week.
Bye.